I remember a few years back when I was working with consulting clients, and I was, of course, in the habit of presenting them with the standard financial statements, balance sheet, profit and loss, statement of cash flows. And over time, I noticed that even clients who didn't necessarily at the forefront seem to care about looking at that stuff, they didn't seem to want to. Once I could get them involved in the process and review the stuff with them, they started seeing tremendous value in what I could offer them. They started understanding the value of what they were paying for, even in terms of the bookkeeping, because they were able to now see the output and what that information told them about the financial position of the company. And perhaps even more importantly, how they could make very intelligent decisions about their companies and the direction they want to go in based on that information. Over time, I started to ask myself, what could I do to provide even more value? How could I use this information that's in the balance sheet, profit and loss, and statement of cash flows to give them even more information that would be even more useful, and they could use it in making decisions about their company? This is why you need a product like Finagraph, because as you take a look with me and we start to get a look at what Finagraph can do, in a few minutes it will extract all of your financial information from your accounting software, and in minutes it will present you with a dashboard that not only displays these ratios and other really valuable information, but also gives you interactive aspects where you can hover your mouse over a ratio and it gives you an explanation of exactly what that ratio means. And this is why it's important to start learning what all this stuff means. And Finagraph is a perfect place to start for the very specific reason that it doesn't just offer you the product, it teaches you at the same time. And I'm going to show you this during the course. You're going to see how when you hover your mouse over a ratio, it gives you the definition, and it even goes on to give you potential solutions in cases where that ratio, let's say, is lower than what it should be compared to an industry average. So we're going to show you in this lesson exactly what this looks like in terms of what you'll see when you have a completed Finagraph and how you can navigate around and start learning about these ratios, what they mean, and how you can use that information to provide that much more value to your clients. Let's see what this looks like. The future of accounting and bookkeeping is already here. We talk about a lot of things in the context of being in the future, when in reality, these things are already here. I've written a few articles in our blog this year. I've also written some content recapping what Doug Sleater talked about at the last Sleater conference. And there's an underlying theme here that we've seen happening for a while now. It's mainly been seen by people like myself who are always kind of trying to stay on top of the latest and greatest technology. So we tend to be the first to look at these things. We tend to be the early adopters who get into these things before anyone else does. And it takes time, but eventually everyone else follows, and they see that we actually might have some idea of what we're talking about. One of these things that we're talking about right now is how, as time progresses, as the technology progresses, and as time moves on, the need to enter data for accounting purposes is diminishing. We're getting closer and closer to a near zero data entry world. Will we ever get to an entirely zero data entry world? Probably not, but we'll get really close. And what that means is that bookkeepers' roles are changing. Accounting professionals' roles are changing. We're spending less time entering data and more time, therefore, analyzing that data. The bookkeeper's role is going to change specifically in terms of the fact that they'll have less data entry to do. So what they'll be doing instead is, yes, they'll be massaging the data, they'll be babysitting it, making sure that it does get in and get coded to the right category, making sure that the information flows where it's supposed to. And then the bookkeepers and accountants together will work to make sure that the balance sheet and the profit and loss properly describe the financial position of a company. And then what are we going to do with all the extra time we have, because we didn't have to spend all the time that we used to have to spend doing data entry. Prior to that, it was the time we saved by no longer having to keep manual ledgers, right? So we went from that to the computer age, and that sped things up. So we were able to do more in less time. Now it's changing. Now we're going to probably not want to do so much more. We'll probably want to use that time to our advantage in a little different way. And that's where a product like Finagraph really comes in, because it underscores this very specifically. This is a product, I want to emphasize, that was not built for accountants and bookkeepers. It was built for the lending industry to use this kind of information to more easily evaluate a company's credit worthiness. These are the kinds of things that banks look at when determining a company's ability to repay a loan. And for that matter, these are the kinds of things that potential investors look at when determining a company's sort of viability in terms of whether or not it's something they want to invest in. I know that people are interested in this kind of stuff because when I did our mini course on evaluating companies for investment in the Shark Tank, we've gotten a lot of feedback and response from that. A lot of people have viewed those videos. A lot of people have downloaded that template. So Finagraph is just going along with the same theme here. And I mentioned in the write-up in this first section and lesson on how will Finagraph and ratio analysis help my business. I shared a story with you. It's a true story that happened years ago where I got involved with a project called Analysts Online. And in the course of what I was doing there, I went down to San Diego and sat in on a seminar from an asset manager who manages a very large fund, and he manages it for very wealthy investors. And he talked about how he analyzes companies, and it came down to this. It came down to the fundamental analysis, which is really a fancy way of saying the ratio analysis. We're looking at ratios. And this is where Finagraph comes in, and I jokingly put in the write-up that I was very disappointed when I first saw Finagraph. And the reason is because Finagraph took what I had created in the form of an Excel template and improved upon it tenfold, at least, because it did all the things that my template was designed to do, but you don't have to key anything from your balance sheet and P&L. That information gets pulled directly from your accounting software, and it builds in the form of pop-ups, like you saw in the write-up, for example, right here, on what is the quick ratio. Fundamental analysis takes a look at financial ratios. It takes a look at things that we're going to talk about as we progress through this course, such as the quick ratio. The quick ratio is a ratio that takes a look at, in the short term, how able am I to satisfy my obligations based on the assets that I have, and specifically based on what we call current or liquid assets, meaning if I had to pay off all my near-term debts tomorrow, do I have enough money in the bank to be able to do that? Or do I have enough short-term assets like receivables that I can expect to collect over the next 30 days, let's say, in order to pay off those debts? And for that matter, how many times over can I do it? So a quick ratio of 2.0 means I could pay off these debts twice with the assets that I have available to me. This is kind of the core of what Finagraph starts to do for us. It looks at the quick ratio. It looks at the current ratio. It looks at a bunch of other ratios. And coincidentally enough, or not, if you have taken a look at some of the certification exams that are coming out for the popular accounting products that we use, especially the cloud accounting products, they're building ratio analysis into those certifications because it's becoming that important. It goes back to what I've already said. The more that we progress with the cloud technology, the more our roles are going to change such that it's going to be expected of us to be able to look at these ratios, understand what they say, understand what they mean about the company and its financial position, and for that matter, be able to explain all that to a client so that they can appreciate and get so much more value out of the services that we offer. So I think this is important because a lot of bookkeepers might be intimidated by this, right? I'm not a financial analyst. What am I going to know about ratios? And the beauty of this is you don't have to know anything about ratios. This is what I really love, especially as an educator. This is what I really love about Finagraph, is it doesn't just give you a product, it teaches you. So as I'm wondering, if I'm looking at this and I'm wondering what a quick ratio is, I move my mouse over and it gives me a very nice detailed definition of what a quick ratio is. You got to keep your mouse over the words. Take a screenshot and read it. Spend the time understanding this well enough so that you can explain it to your client. And when I click on it, it expands on it further, and it gives me the example based on this information comparing our actual quick ratio with the industry average. So if the industry average for this sample company is 2.73 and we're at 5.69, that means we're, compared to the industry, doing really well. We're going to take a look later on how we can change the comparison to comparing with our own goals, for example, so that I might set my goals based on if my ratio is 5.69 now, then maybe I want to set a goal that I want to get that up to 8. Maybe I always want to be, that much solvent in terms of what the quick ratio says about the financial health of my company. So this is the beauty of a product like this, and this is why I wanted to do a course on it. This is why I want to present it to accountants and bookkeepers everywhere, because it is so powerful in terms of what it will give you in the form of a tool that you can use to provide such incredible value to your own clients. Because at a glance and within minutes of setting up a company and importing the data, you have this. You have the ability to lay out in a very visual way what things look like. I mean, look at the open invoice concentration here. It's a graphical view, and I can click off one of these customers to get rid of it to see what it looks like. And we can download things. It's very, very interactive. And as we go through the rest of the course, I'm going to show you all of this in great detail. But for now, what I want to invite you to do is go to finagraph.com, take a free trial, and start playing with the sample company. Start reading about what these different things mean. And then we're going to take a look at the rest of how Finagraph works. We're going to show you how to get to this point by connecting a company. We're going to talk in the next lesson about some of the important things that you'll need to know when you're getting set up. We're going to look at NAICS codes, NAICS codes. So your homework for this lesson is to get your free trial with Finagraph if you haven't already, and go over the sample company. Get an understanding of what some of these ratios mean at a high level. And of course, if you have any questions and you're an enrolled student at schoolofbookkeeping.com, then please ask those questions and our answers for them. If you're not an enrolled student, enroll. As always, I hope you're having an absolutely fantastic day, and I look forward to seeing you in the next lesson. As you can see, it's going to prove to be incredibly useful to start getting an understanding of what all these ratios mean, especially in terms of how that understanding can enable you to provide tremendous value to your clients when you go ahead and start using these ratios to analyze their financial information and then explain to them what it means about where their company is, and for that matter, using that information to take a look at where the company is headed. Now that you have an understanding of what's at the foundation of what we're looking at, we're going to start getting into the setup of Finagraph. And the first thing we'll need to do is set up a business, which means that we're going to take a look at what we call NAICS codes, N-A-I-C-S codes. These are codes that are used to describe in the United States what industry a company might be in. And we're going to use this information in Finagraph to compare your company's data with industry average data so that we have that benchmark to use. A ratio on its own may not really be that meaningful until you have something to compare it with, and that's where the NAICS codes become really important. We'll take a look at that in the next lesson.